Welcome to today's market report.
European stock markets weakened on Tuesday, continuing to feel the backlash of China's regulatory crackdown, while the corporate earnings season continues in mixed fashion. DAX in Germany traded 0.9% lower, CAC 40 in France fell 0.7%, FTSE 100 dropped 0.9%. The second quarter corporate earnings season continues to dominate thinking in Europe, with a number of high-profile companies reporting results. LVMH stock rose 1.1% after the world's largest luxury goods group posted higher sales and profits, the sector recovering from the reopening of stores after the pandemic. Revenue for the first half was up over 11% from the comparable period in 2019, before the pandemic began. Dassault Systems stock rose 2.9% after the French software company lifted its 2021 outlook on surging software sales. On the flip side, Reckitt Benckiser stock slumped 8.6% after the consumer goods company mixed expectations for second quarter sales as demand eased for its hygiene products. Sentiment in Europe was hit early after a largely negative handover from Asia, where several major Chinese tech stocks listed in Hong Kong remained under pressure on the back of regulatory fears surrounding China's wider technology sector. Investors will also await second quarter results from the big tech giants Apple, Alphabet and Microsoft later on Tuesday, given these companies have been behind a lot of the gains the major US indices have registered for much of the last year. Late Monday, US electric vehicle manufacturer Tesla posted strong results, recording over $1 billion income for the second quarter. Also of interest will be the start of the latest Federal Reserve two-day policy meeting, which could see US Central Bank providing more information over the strength of the US economy, as well as its thinking over when it will start to scaling back its hefty asset purchasing program. The economic data slate is largely empty in Europe on Tuesday, with today's major release being the US durable goods number for June, which should confirm the country's growing recovery. Elsewhere, oil prices were largely unchanged on Tuesday as traders continue to weigh the tightening of restrictions in parts of Asia amid a COVID-19 resurgence, with growing demand in the more vaccinated West. US crude futures traded 0.1% lower at $71.86 per barrel. Brent fell 0.1% to $73.67 per barrel. Gold futures fell 0.1% to $1,798.10 per ounce. On the FX front, sterling climbed above 138 against a broadly weaker US dollar yesterday, supported by encouraging data the previous day showing a fall in COVID-19 cases in Britain. The dollar lost ground across the board as investor focus turned to this week's meeting of the US Federal Reserve. Sterling has held up better than most major currencies in recent weeks, supported by Britain's high vaccination rate at a time when the Delta variant has caused cases to surge worldwide. The pound was the second best performing G10 currency over the previous week's 5-day trading period. The focus on the German business climate, which slowed for the first time in 6 months. The index came in at 100.8, down from 101.8 and shy of the consensus of 102.3. The decline was a result of a rise in COVID cases and the supply disruptions, which have weighed on the economy and soared business confidence in the Eurozone's largest economy. ECB policy meetings don't usually garner much attention, but last week was different. There were expectations that the meeting would shake up the currency markets, since ECB President Christine Lagarde had announced that the bank would adjust its forward guidance with a strategy review that was released earlier in July. In the end, the ECB shifted the language in the forward guidance, but the research from the markets were muted, with the euro showing only minor losses. The dollar hovered below recent peaks overnight as investors turned to this week's Fed's meeting for clues on the policy outlook, while cryptocurrencies pulled back sharply from an attempt to break out of a month-long range. The greenback has been rising broadly for more than a month as markets have become wary of the Fed starting to taper its monetary support. Investors turned long dollars for the first time since March 2020 last week, positioning data showed.
This is today's market news. Thanks for listening. We'll see you next time.